Did you hear that? Did you hear the record skip at all? I thought it skipped, but anyway. Oh, what happened? Where's it? Come on back here, buddy. Hey, everybody. Okay. Did you hear that? Did you hear the record skip at all? I thought it skipped, but anyway. uh, all right, sorry there. I'm just kind of getting ahead of myself here. I got it streaming on YouTube live stream, so that's where we had a little delay and whatnot. Anyhow, high captions. Okay, all right. I think we're going here, right? I think we're moving along nicely. Okay, good, good. Week in review. Whew, whew. All right, let's get ahead of ourselves here. So, okay, show. We're doing everything right. I think we're doing everything right. Bear with me for half a second while I get caught up here. All right. Okay. I think things are all right now. Yeah, it should be. Okay. You don't know what goes on behind the scenes here, but there's a lot of finagling I have to do to make things work here around here. So anyway, you're there. I'm here. It's 8:04 Eastern Time. Good evening, everybody. My name is Hugh. This is our DayTradeSPY.com Sunday night weekend review, winter the trading, whatever. Good to have you all here. There is a questions box. Please feel free to use the questions box for any questions or comments you might have. You'll find that little questions box icon on your Zoom dashboard. Let's see, did I write that in there? Yeah, you should see that in there. Anyway, before we go much further, there's this disclaimer, the standard disclaimer that keeps us out of trouble. Take a look at that. I guess you know that you'll only responsible for your own trading, and past performance does not guarantee future results. All right, and there I am. Okay, there we are. Ah, looking good, looking good. Let me get in front of the camera here properly. There, should be good. All right, man. Questions box again. There's your questions box for your Zoom dashboard. Click on that. Um, Also, if this is the first time here for you, let us know in the questions box, all right? Let us know in the questions box. It'd be just to get to know. And if you're new to trading, let us know that as well. Otherwise, I'll just move along because I don't really want to reiterate what options are and all that stuff if everybody here is familiar with options trading. Okay, so. All right. Okay, here comes the comments already. All right. Meet your host, yours truly. My name is Hugh. I've been learning, well, still learning. I learn every day. I have been trading options for a very long time. Most of what I teach, I learn from deep in the trenches, folks. That's what I do. Whenever I have a bad trade, I'll take a look and see why did the trade go bad on me, and I take some lessons from that, and that's what I try and teach you. And I've been trading publicly here, teaching publicly since 2010. And looking for short-term breakout trades for those small multiple daily gains. Now, several years ago, actually it's 3 years ago now, that Eagle Financial Products, I can't believe it's been 3 years. They bought us out and they hired us back. He said, "We can't live without you, you." I said, try. No, we can't. Anyway, they got me back and they brought on John Johnson. Yes, he is. He used to be a litigation lawyer and still lives in beautiful Texas. And he's turned into an options trader, day trader trainer. Very highly qualified, very highly acclaimed in both industries. And he's appeared in many industry publications. His philosophy is very simple. Take what the market will give you. Take what the market will give you. Um, very good words to live by because we have very similar philosophies. Take what the market will give you, right? And really, that's been working very well for both of us for a very long time. So that's what we do is we teach you how to do that. It sounds simple, but it sounds easier than it is. It's sometimes not that easy to do, but we certainly strive toward that. And we found that the enemy, folks, is not actually the stock market at all. In fact, it's your best friend. The enemy is the person in the mirror. Hard to believe that, but yes, that's what it is. So anyhow, we're going to take a look at last week, and we're going to get a little preview of next week. That's what we're going to do here tonight. A little talk about the 5 to 50K challenge. Then we're going to go to the pumpkin patch for just have a little chat out there, talk about your challenges, give you a little bit of a 2-minute tutorial, show you how we can help you answer your questions, and then we got a little contest, and the winner is going to win an ebook. All right, speaking of ebooks, we write an ebook. Actually, it's not an ebook, it's a newsletter. Every week it goes out on Thursdays. If you don't have a subscription, all you have to do is subscribe. Go to our website, daytradespy.com, and when a little pop-up comes up for your email address, just put your email address in there, and then you will receive every Thursday your copy of Spy on the Market. It's a jam-packed newsletter full of interesting things. It's actually got, we talk about one thing. Very brief read, actually 750 words is what they told me to do. And basically 2, 3 minute read, very easy, very quick, very relevant, timely usually. And this week's topic is going to be the 90-90-90 rule of trading. 90-90-90 rule of trading. All right, so let's get on with what happened this week. Excuse me. Here's a look at the chart this week here. This here is an hourly chart. Every one of these candlesticks you see in the market shows us that the market went up that hour, and the red candle tells us the market went down. And we on Monday we had 9 wins, 1 loss, 1 hold. Markets closed lower. A little nervous because Nvidia results were about to be released in a couple of days, and there's a lot of nervousness around artificial intelligence. There's lots of volatility around that, thinking, oh, we're in a bubble and what's going to happen. And Nvidia is sort of the bellwether for all that. So things are getting a little nervous. Monday, Tuesday, more of the same. We got a little bit of a bounce there, but the S&P 500 lost 0.83% on Tuesday, making it the longest slide since August. Tech stocks remained very much under pressure. We had 9 wins though on Tuesday. On Wednesday, we had 10 wins, 1 holdover, as interest in Nvidia after hours earnings rose. SPY snapped a 4-day losing streak. I don't know if word got out early that Nvidia is going to be pretty good, but they beat all their expectations across the board and regained confidence in the AI world and chips and whatnot. So the market did go up. In fact, it continued going up into after hours into Thursday. We had a really nice run up here Thursday morning where Nvidia earnings blasted over expectations. They rose SPY way past the mid 675s. And then we had some profit taking and also Fed speaks. A lot of Fed members spoke, and there's a lot of dilemma right now about interest rates and whether they should cut rates or not. They're concerned about inflation going up, and they still want to get down to the 2% inflation level. They're worried about employment. They didn't have enough data because the Feds were out of work for so long, and they don't have the data. So there's a lot of misconceptions there. But anyway, the market got a little spooked on that, and we just tanked. Oh my gosh, what did we tank here? We came down for about 676, 676, and what's that of the 640? We dropped about 26 points here in about a day and a half. Bounced around here pre-market on Friday morning, and then we started to push back up as the bulls rushed in. Also fueled by the New York Fed president supporting a December rate cut. He says that he fully supports that and wants to move forward on a rate cut in December. SPY climbed back to test 664 before settling in just over 659. Wrapping up the week, we had 12 wins on Friday. Pretty well pretty well an okay week. We had a lot of wins, 2 losses, but overall could have been a little better. But it can't complain about that here. So we had global markets, of course, are hit by another bout of volatility. Finished up a choppy week. A lot of that volatility is in the tech sector, and particularly, as I mentioned, artificial intelligence. A lot of nervousness around Nvidia earnings and the ongoing bubble chatter. A lot of talk about that. And also AI stocks, they remain under pressure as the Magnificent Seven, uh, down about 6% in November. All right, some of these stocks were pushed up, but a lot of them have suffered some losses. Especially, we had some earnings reports that were not too favorable in a couple of the Mag Seven stocks, so that kind of pushed things down. A lot of ambiguity still over the Fed Reserve's next steps. Trying to get a read on the economy, especially over the government shutdown-driven data disruptions. Not really sure where things are going. A couple of charts I want to show you here. This chart shows the monthly performance of the S&P 500 index each month. This year, 2025, as you can see, the index pulled back this last month, November, after a strong run. From about April, May on, we had some really good climbs here. What's this, about 6% in May. Excuse me, that dropped off a little bit here. June, July, August, September, October, November, we have a bit of a loss here. And March was really bad. So we're not as bad as we were in March, but kind of leveling off here. So not to expect those massive returns as we were getting. Got to be careful about that. Here's the 3-month average gain in non-farm payrolls. A lot of talk about non-farm payrolls, and this is why interest rates are they want to push it down and get employment back up, and but they want to be careful that they don't raise interest rates. So it's a bit of a double-edged sword with interest rates, right? So here's the chart there. We did have a little bit of a blip to the upside here in last a little while. And here's some numbers. So let's go back to the numbers. S&P 500 dropped 1.9, almost 2% this last week. Year to date, still pretty good at 12.3%. Not as good as the Nasdaq, came in at 15.3. That had the bigger drop here this last week, down to 2.7. Dow also dropped just about 2%. That too came in at 8.7% year to date for the Dow. All right, so here's the seasonal charts. For anybody unfamiliar, that blue line up at the top is the current SPY price, SPY. That's what we trade, the SPY. That's the stock that follows the top 500 stocks, the S&P 500. That red line is the average of the last 5 years closing price on the daily chart. And if we zoom right in here, we will see that historically, SPY stayed the same over the last week. Seasonally, SPY rose about 2 points the following week. All right. So that's kind of what happened there. All right. The week ahead. Week ahead. No low news day coming up on Monday. Going to be pretty heavy news on Tuesday and Wednesday. We've got retail sales, PPI reports, producer price index. We've got pending home sales, Richmond manufacturing index, and the Conference Board consumer sentiment. They're all slated to report on Tuesday. Wednesday, we've got some GDP numbers, gross domestic product, along with unemployment claims, durable goods orders, Chicago PMI, um, and PCE numbers, personal consumption expenditures, and that is what the Feds use primarily to determine what they should do with interest rates. So it's going to be interesting to see what happens there. Also, some personal income, and I believe we also have inflation expectations on Wednesday as well. Markets are closed on Thanksgiving, Turkey Day. Nothing is going on. Banks, everything is closed. Big travel day for the weekend coming up. And Friday, it's another no low news day. Markets close early, I believe at 1 o'clock Eastern time on Friday. So we're going to be having a short week here this week, and hopefully make a few bucks early on in the week, and then damn it, we got a long weekend. What am I gonna do? Yeah, I know. You gotta spend time with the family, right? Yeah, no, that's okay. Not a problem. We'll be doing what everybody else is doing, just kind of hanging out and I don't know, maybe watching a football game or something. Who knows? That's what everybody does here on Thursdays, right? On Thanksgiving. Then anyway, a lot to be thankful for. A lot to be thankful for, and maybe that's what we should change our. Maybe that's what we should change our newsletter. We'll see. We'll see. Um, Anyway, we'll take that up maybe later. All right, upcoming volatility, expect low on Monday, high on Tuesday, Wednesday, nothing on Thursday, and of course low on Friday. You know, you ever sit back and just wonder what can what are we thankful for? Sometimes we, complain and gripe about things, but when I sit back and I think of all the things I'm thankful for, there's really no end to it. Um, I can't begin to tell you. We live in a part of the world where there's relatively free of war. Imagine if you're living in Ukraine, right? I mean, wake up every day wondering, oh, well, that's a good sign. I woke up, and my roof is still on the house, and all these crazy things. So we don't have to worry about that. Got hot and cold running potable water. Good late model cars that work very well. Fueled up, lots of charge, food in the fridge, good food. I mean, we've got it really made. A few bucks in the bank. There's different things. So we're probably better than 99% of the people out there. If you think about all the things that you have, you got a nice, loving family, wife, kids, all that stuff. Geez, we drove by some homeless people yesterday. I couldn't believe it. Just looking at my wife, look at that. You think you got problems? Look at this guy here. His whole life's belongings in those two bags sitting right beside him as he's curled up under a blanket in a doorway. Uh, you know, I mean, they got issues, right? But we're very thankful. So anyway, this is what the volatility is going to be like here, folks. So yeah, we are in for a short week. Daphne, that's my good friend Daphne. There, she says we find the opportunities. We show you how to spot them and how to trade them. All right. There are two different things here, not just spotting them, but you also know how to trade them and how not to trade them. And not every setup is an opportunity to get in. There are going to be some setups that I say, well, there's the setup, but hang on a second, I don't want to get into that one. And then we show you why, right? And that's what we do. We show you whether a trade is good or not. So, and that's kind of really important. Folks, if not in the trading room yet, you should probably really consider it. And the reason I say that is because we're going to talk a little bit about the 5 to 50K challenge. This is something that we had done earlier this year, started in January the 6th, took $5,000, turned into over 50K. We did this early, wrapped it up in the middle of September. And we do this exclusively in the trading room. It's not too early to get in. I recommend that you join the trading room as early as possible. The reason is because you want to be ready for it. You want to know exactly what we do so that you are ready come January. We're going to do this again in January. We're going to start in January. We take $5,000 and we are going to look to turn that into $50,000. That's kind of what the idea is, and exclusively in the trading room. And again, we did this previously in this year. I don't know how long it's going to take this year. I'm gonna relax with it and just kind of take it easy. But there's a reason I say this. There's a reason I say this. Okay, I'm going to tell you right now. Folks, do you have the ability to trade multiple times a day? In other words, do you have, hopefully you are okay with the pattern day trade rule. And why I say this is because if you have $25,000 or more, you can actually day trade in and out as much as you want. Now, you do not have to have 25,000 in your trading account. As an example, let's say, you've got, I don't know, 401k or whatever, retire, it's any kind of retirement money, anything at all. Put it all in the say Schwab, all right? Money markets, whatever, and just keep a few $1,000s. If you have five, six, $10,000 in your trading account, that's fine. All right, but if you got the ability to trade 25, if you have the ability to have 25K or more in your overall account, you can day trade in and out as much as you want. If you have that, and if you have discipline, you can, and I'm going to show you this here in a spreadsheet in a second here. You can actually take five to $50,000, and I'm going to show you in the plan here. I'm going to pull it up right now. Let me see if I can find this here. Okay, here it is right here. Got all these. Okay, I'm gonna bring it out here. Hang on a second here. I want to make sure I have it. Okay, and there it is right here. Okay, this is it here. So this is kind of a spreadsheet. I wish I can get rid of all that stuff on the top, but I guess I can't. All right, we're gonna bring this down here. Okay, I'm gonna show you this spreadsheet. All right. Okay, so let's say we start on January the 6th, all right? January the 5th, rather, January the 5th with $5,000. Look at it's not that difficult to make $200 a day if you have $5,000 in your trading account, especially if you can go in and out, in and out, in and out. Okay? So let's say day one, you make just $200. You'll do that in your sleep by accident. There you go, 5,200. Next day, 200. Next day, 200. Next day, 200. You do this for a while. Let's say you do this every day of the year, right? Every day. You're only trading up to 5,000. Okay. Now you got 7,200 in the middle of January. You just push this thing up. You're making $200 a trade, right? You're making $200 a trade. It's going up nicely here every 5 days, right? Once a week, you're up $1,000 more, right? There's something like, how many trading days in the year? Let's see. I think there's 250 or 252 trading days a year, something like that, right? And so let's say you just make $200 a day. That's $1,000 a week. If you're trading 5,000 or less, you can do this very easily. All right. The key is to not get greedy. That's the 100% key. You're trading up to $5,000. Now, as you accumulate your ending balance is growing, right? You're only trading 200. By the way, let's say you're trading $10,000 here. You got 10,000 in your account. Believe me, $200, that's nothing, nothing, nothing. You don't even have to be under the trading pattern day trade rule there. You can do, you get enough equity in there to be able to go in and out. Once you have this equity in your trading account, you don't even have to worry about the pattern day trade rule. So if you want to trade a little more around here, go for it, folks. But be careful, right? You're only still going for $200 a day. $200 a day. Oh, we're up to now $300 a day. Sorry, I am lying to you. $200 a day here. We're doing $200 a day, getting into the whole year. If that's all you want to do for the whole year, all right, you should have your $50,000, all right, by the end of the year in December. In fact, you should have that. You should hit your 200,000 mark right here in middle of November. Okay, so if you're taking 5 to 50, and again, you're not trading the whole 5,000, just up to 50,000, just up to 5,000. If your goal is to make just $200 a day, you should hit 50,000 by the middle of November. Now you're going to ask, oh, what about losses? Well, I'll tell you something. Trading the way we trade, you shouldn't have any losses if you actually follow our rules. Now, this last year when I did it, yes, I had some losses, but that's because I was pushing the envelope. All right, I traded when I should not have. I did not follow the rules. I went out on the limb. I took some high risks. But when I don't take risks, when I trade with safety in mind, okay, then I do very, very well, and I don't, I don't create losses. The key here is to just be very, very careful, and just be very careful with your emotions more than anything else. Watch your greed. If you're a greedy person, be very, very careful about the greed. Now I'm going to show you something. Let's flip it over to say $100,000. Can you take 5,000 to 100,000? Absolutely. In this case here, let's say we're trading $200. We're starting with 5,000, but we're only looking to trade $200, make $200, and we're going to do that from January the 1st to right here, the end of March. First 3 months, we're only looking to make $200 a day, starting with $5,000. Well, that'll take us to 17,400. Now let's say we go a little bit more. All right, we're going to go at $300 a day now. All right, now we're pushing $300 a day from April the 1st. And take a look at our ending balance over there just to the right. $300 into the end of May, right? So we're going to do that for a couple months. There's our ending balance, 30,600. All right. And over here, as I mentioned here, instead of aiming for $200, now your goal is 300 in April. Discipline will be needed here to curb your appetite to get back in. Be very careful. Just because you have 28,000 in your account doesn't mean you're going to be trading the whole amount, as luring as it is. But then come what? June? Come June, you're going to be trading and you're going to be making $400 a day. because you can, right? Here's your ending balance, 31,000, 32, 33,000. Watch your emotions here, your FOMO, YOLO, stay with the program, FOMO, right? Fear of missing out. And you only live once, YOLO, you only live once. This is where it gets tough because you're going to have all this money. You're going to say, well, I want to trade it all. You're going to want to get in. I'm not making this up. I've been there, done that. I still have those emotional lures, but now you're trading $400. Only you're trying to make $400 from June the 2nd into all the way to August the 29th, right? June, July, August, maybe 3 months. Now you've got, look at this, $56,000 in your account. Now instead of making like two, three, $400, you're going to be going for $500 a day. That's not a lot of money when you're trading $56,000, $57,000. You're going to take that from September the 1st. By the way, this considers the holidays, right? You'll find that the holidays, the weekends are not in here. So now you're trading $500 a day, and guess what? By the end of December, you'll have hit your $100,000. You'll have taken $5,000 and turned it into $100,000. All right. Watch for these various emotions, as I mentioned. Watch for your emotions. Be very mindful of that. Near the end, watch for what we call the gold gradient effect. This is a real term. It refers to the concept of as you get closer to the target, you're going to want to take on more risks and hurry up and get there. You want to hurry up and get there. This is the very term given for marathon runners, which is why I see a lot of ambulances parked at the finish lines because the runners, right, they start out, they pace themselves, they go for that, what is it, 25 miles or whatever running, and they have pace themselves, but as they get closer to the finish line, they turn up the heat. They start running faster and faster and faster because they want to get there, right? They want to hurry up and finish. Then they get heart attacks and die. You don't want to do that. So watch for the gold gradient effect as you get near the end because you're near the end there. Look, you got 75, $80,000. You got to be very careful. You're almost there, folks. You're almost there. And come by the end of December, you'll have turned 5,000 into over $100,000 if you just follow this plan. If you just follow this plan, congratulations, you made it. Now, there are people that do this. Now, here, let me tell you something, okay? It's not that hard to do. And this takes us into the 2-minute tutorial. And the 2-minute tutorial is tonight about discipline and how to hone it. I look at discipline like a muscle. And if you hone it, all right, if you hone it, you can, you can, you can improve it, right? You're improving your discipline. It's one of those things you gotta, use it or lose it. Um, I have different ways of trying to hold my discipline. Doesn't always work. One of my favorite ways is to drive the speed limit. I like to drive fast, but if I discipline myself to, okay, for the next 10 miles, I'm going to keep my my speed down to the posted speed limit. Of course, it drives people crazy, but I usually do it, when there's nobody around or when it's quieter and I'm not interfering with traffic or anything. But there are different ways to do it. And here's what you do. You got to first of all, in the trading world, you have to create yourself a very good trading plan. Just like when I showed you, set up your own, set up your own spreadsheet. Something that is workable, all right? Something that you can attain. That spreadsheet is very attainable. It's not something that you have to be a stunning genius to do. Anybody could do that. Um, that's the one I'm going to be using. Okay, and make it your own. All right. If you feel comfortable making say $250 a day, do that. All right, but don't put a target on so high that's so challenging. You're forcing yourself to do it. And there are a lot of days when I did the original 5 to 50K where I just didn't trade that day. For whatever reason, I didn't feel like it. Um, I knew I wasn't going to maybe watch the market all day. Even if you don't even have to watch the market all day, but for whatever reason, maybe I was feeling under the weather or I just didn't have the motivation or whatever. Not every day is going to be a good trading day. Some days you're going to do very well. Other days you're going to just kind of, plod along, right? But set up your own spreadsheet, your own trading plan. and make it very reasonable. Excuse me. And you know, and if you don't make your target in the year, it's not the end of the world. These are self-imposed targets, all right? Self-imposed goals. I was working with some people earlier with this that they're just trying to take 5,000 turn into 20,000, which is which is outstanding. I mean, think about that. You're what, quadrupling your money or something like in a year? Like who does that, you know? Uh, and then you want to follow the rules. Set up some rules. Our rules are going to be very simple. They're going to be we're going to trade in the trading room. We're going to trade our system. I'm probably going to just look for calls because I just have more luck with calls, if you want to call it that. I don't like to call it luck. I guess more good fortune with calls. I do better with calls than I do with puts. I know the markets gravitate to the upside, so that's what I like to do. I like to do calls. If the market goes down, it goes down for a reason. It's going to go down now. And but one thing I found out about puts, so put options, if you are looking to make money to the downside, you buy put options. But one thing I noticed about puts is that we'll always find some level of support, and then it's going to come back up. Okay. And one thing I don't want to do is be stuck with puts, and now I'm stuck, and I got to get out of it. Um, One of the things I notice when I go back and I check my log is that whenever I had trouble with my trades, they were always on puts. Okay, so I'm going to probably stick to calls. I am in a position where I can trade multiple times a day. All right, not to say that I'm going to, but we're going to see about if the markets give us those opportunities, we're going to take them. All right. Now here's another thing here. If you do drop 25 cents, I'm going to bring in this little control as well because I know I've been kind of going out on a limb on some of these trades where I would just stay in it even if I was down quite a bit. Because overall, from a macro level, right, overall picture, big picture, I would believe that the market's going to come back up, and it would always, you know, not always, but usually it would come back up. But I think this time I am going to implement a control that if I am down, say 25 cents, I will take the loss because it's very easy to make up a quarter. Okay, so that's going to be kind of the strategy there. You can always make it up for later. 25 cents is not hard to make up on trades, right? And you know, here's the thing: when you hit your daily target, you gotta quit. Unless you're really on, you know, you're really at one with the market, you see it continuing to go up, you've got every reason to believe, and you're going to make a few extra bucks. But as a rule, don't keep pushing, pushing, and pushing. I found that that last trade I do is oftentimes the very challenging trade. I'm going to show you in a minute what I mean. So hit your target, wrap it up, call it a day, turn off your computer, go do something else, right? And you're also going to be practicing discipline in other areas of your life. As an example, this is something that I'm working on too. In fact, you should start now. If you're gonna do this starting January, you should start practicing discipline now. By that I mean, you know, is it a fitness protocol? Are you gonna say, I'm gonna walk 5,000 steps a day or whatever? Start it now, right? And actually do it. Is it something like a diet? I'm not going to eat after say 8 o'clock at night. I'm going to cut back on my sugar. I'm going to cut whatever my sleep schedule. Instead of going to bed at 1 o'clock in the morning, I'm going to go to bed earlier, 11:30 or something like that. As an example, right? Find those things where you need some discipline because you know it's going to be good for you for your health. Well, this discipline you're going to be using for your health is also going to transfer over to your wealth because when you're disciplined and you exercise discipline in the stock market, you generally do very, very well. All right. So this is the thing is, all right, so you're going to start this now. And the more disciplined you are overall, all right, the easier it is because the stock market is really about discipline. If there's one word I had to market, it's not the market. The market gives you opportunities every day, all day long. All right. And we're looking for long-term goals here. And our long-term goals are just going to be a series of short-term gains. We're going to build this house brick by brick by brick by brick by brick. We're going to put it all together, right? And in doing so, we're going to have a nice, strong house. Okay, nice, strong building, brick by brick. It's long-term we're looking for. Um, of course, there's no guarantees I'm going to stick around to the end of the year. But as long as I have a breath in me, I plan to. Okay. So, God willing, and we able, we'll be here for a year. So we're just looking to do this, and if I can teach you how to do it, great, right? And that's going to be the idea. Now, I'm going to give you an example here. On Friday, I purposely did this on Friday to show you what you guys want to see my real trades on Friday, folks. You guys want to see my real trades? Tell me in the questions box because if you're not interested in this, we'll just skip it over and move along. So tell me in the questions box if you want to see my trades, or just say no, then skip it over, or yes if you want to see them, and you'll see what I did here. And okay, because I don't want to bore you with these trades. Oh, okay. All right, good. There's lots of yeses. Okay. Okay. Okay, cool. Okay. All right. Sounds good. Okay. Well, I'll show you my trades. All right. Okay. Here. Okay. Let's just go on. So these are real trades. And what I was doing here was I was actually preparing for the Sunday night show by showing you how I can, so I'm putting my money where my mouth is on this whole thing. All right. Now, normally I trade more than five contracts. Okay. I'm not going to kid you, but what I'm doing is I'm trying to show you exactly what I'm talking about here, and no hypothetical this or hypothetical that. These are real trades. I traded um, five contracts per trade. And in doing so, I used our setups that we do. This is in the trading room. It's all in the trading room here. And what I had done here was my first trade came in at 934. This is all on Thinkorswim, Schwab Thinkorswim. I traded them all. You can see here, they're all calls. So green is when you're buying, that red is when you sell. I got in for 869 out at 885. This over here, when you look over at the time, over on the left side here, all right, it's all November the 21st. There's the time, 934 to 936. That was a 2-minute trade, right? 2 minutes and 8 seconds to be exact. I invested $2,845. This is all, by the way, excluding commissions. Okay, excluding commissions. Well, okay, so I made $80. I made $80. Okay, so I had my target. I hit my target and I sold. I picked up $80. You might not think it's very much money. That's okay. The next trade, I did it again. I got it for 880 out at 895. That one was 38 seconds. There's the time right there, 9:41:20 to 9:41:58. My quick math says that's 38 seconds for a gain of $75. Third trade, 849, 865, 3-minute trade, 42.45 invested for another $80 gain. My fourth trade, all right, similar to one before here, 880 in, 895 out. This trade too was a 1-minute trade, all right, from 9:52:40 to 9:53:39. As a matter of fact, not even 1 minute, it's 59-second trade. Invested $4,400 for another $75. You might think, wait a second, you're risking 4,400. This is gonna be a question somebody's gonna ask. You're risking $4,400 to make 75. Well, the answer is yes and no. It's actually no. We're not risking $4,400. We're using $4,400 to get this little bit of a gain here. But these are high probability setups, and we're not going to let it go to zero. We bought time. All of these trades have 1 week to expiration, even though our objective is to get in and out quickly. All right, even though our objective is to get in and out quickly, because frankly, you don't know really, no, you don't know. I'm not going to invest $4,400 or, 2,000, 3,000, even $1,000, with a very high theta loss. And that's what it would be. If I had same day expirations, and I'm sure this question is going to come up, if you're going to be in and out quickly, why not just do same day expirations? And yes, I could, but those are high risk trades. And I might still do some, and I do those once in a while. Of course I do. But sometimes those turn on you so fast you don't even know what hits you. It just comes up and broadsides you from the back of your head. You know, and You don't want that to happen because if you're in a 0 day expiration trade or even something that's going to expire the next day, all of a sudden the market turns on you. You don't have a chance to bail out of it. You just don't have a chance. It happens very, very quickly. The market can go on you, could go south on you real fast. But when you have time on your side, it can bounce around a little bit. It can go down a little bit. Then it's going to come back up. And you're not going to lose that much on theta loss. All right. And if you have to stick in the trade a little bit longer, it's probably going to be okay. And it doesn't matter. So, you buy fewer contracts. Yes, you put a little more into it, but you get it all back anyway. Take a look at all those sell prices. I got all my premium back and more, right? So in this case here, I was in this thing for what, 59 seconds, and I made another $75. My last trade here, I got in at 9:54, and I was in this trade a little bit longer. See, now we're almost at 10 o'clock, 9:54. Well, I happen to be in this trade for an hour, and what's that? An hour and almost 2 hours, an hour and what, 54 minutes or something, right? That's a long time to be in a trade. But this is what I noticed that as the day goes on, you may end up being in a trade a little bit longer because now we're getting into some volatility issues, reversals. You're getting into, we're hitting up into a key resistance area perhaps, and the market's going to come back and retrace. And there's, funny things going on. News is coming out. I don't like to trade. I like to do my trades early on in the first half hour, preferably, and first hour. I like to be in and out in within an hour, and I'm done for the day. But even at that, I felt comfortable enough to stay in this trade, 5 contracts. I invested 43.20 for another $55. No big deal. Well, take a look at these numbers. 5 contracts each. The average investment was $4,042. Total gain here, what I showed you here that I did on Friday, it wasn't $200, it was $365, folks. If I take the commissions out of the bucket contract, that's $340. I don't know what the commissions I pay on Thinkorswim. It's not that bad. Maybe let's say even $1.50, right? For $1.50, well, then my commissions would be what, $510, right? $510. No, that's wrong. That's wrong. That's wrong. That's wrong. Um, I don't even know if this is right here. Three, no, that's no net. Sorry, net of commissions were 340. So my commissions was oh yeah, here it is right here. 25, yeah, 25 contracts, right? 25, and let's say $1.50. Well, my commissions will be 37, $38, even on commission. So let's say even $40. I'm still making over $300 with this. I think I'm making about 320, $325, even if my commissions were like a buck and a half. It's not much. The commission is not much on this. I'm only trading 5 contracts. But this is what the cool thing about it. I hit my $200 profit. If $200 was my profit target, I hit that by my third trade, which happened before 10 o'clock. By 9:48, I was out of it, right? 80 plus 75 plus 80. What is that? That is $235. So if I'm following the plan, that's it. I would have shut my computer off by 9:48 when I sold that, done for the day. But instead, I kept going here because, what, we're in the trading room. I saw the setup. I thought, well, I'll just keep going, show you that this is not only possible, but very doable. So consider that spreadsheet that I showed you. If you're looking to make $200, you'd have been out of this by your third trade. You'd have been out of it. Uh, Done by lunch. All you have to do is just follow us in the trading room. We will give you the guidance that you need. So it's not that hard to do. Not that hard to do. Okay. Now, think of this. Can you see yourself doing this? Punch that up in the questions box. Do you see yourself doing this? Because I want to know. Because if you're not, we're not going to do it. But if you can see yourself doing this, I would love to know that, and we can do this together. And imagine that, right? Imagine every day in the trading room, you make this little bit of money, and by the end of the year, you're like, 50,000 or even more, right? Ahead of the game. I mean, that's pretty amazing. And then we do this. Oh my gosh, I love to see that. All the yeses coming in. All right. Including Rainey. My good buddy Rainey, he's in the trading room. This guy, I've got to tell you something about this. This guy's incredible. He does this all the time. Um, Rainey, you got, yeah, I don't know, man. The secret you got here is, I know you do extremely well. Um, and I just got to congratulate you on this. I'm just wondering if, I wonder if I could open up the microphone to you, maybe say a few words, because you've been in the trading room for a while now. Let me see if I can find you here, Rainey. I got so many people in the chat box here. Hang on, Rainey, are you able to talk? Can you say a few words about what you do here? Because I know you're an excellent, no, no, you're an excellent trader, not just a Rainey. You're an excellent trader. Here it is, allowed to talk. All right, Rainey, are you there? Hello? I don't know if he's got a microphone or not. Okay, where did he go? I can't hear you. All right, maybe not unmuted. I think you might have to unmute yourself, Rainey. Are you there? Hello? All right, maybe he's muted. Okay, no problem. I don't mean to put you on the spot, buddy. I apologize if I put you on the spot here. Okay, no problem, no problem. Okay. Um, no, not today. He says, okay, no microphone, not a problem. Um, no, so here's the gentleman who's been with us for I don't know how long in the trading room. He does extremely well. Very proud of him. And follows the rules, right? Follows the rules, doesn't get greedy. And here's the other thing, all right? Once you find a system, a pattern, a technique that works for you, stay with it. Here's where a lot of traders I find, and I talk to a lot of people, I've been doing this for a long time, folks. We're in our 17th year of doing this. So you can imagine the thousands of people I talk to. I keep hearing the same thing over and over again. People find something that works, but then they keep looking for something else. They keep looking for another strategy, another system, another something they keep working. It's like, that little toy, the little car goes around and it keeps going until it hits an obstacle, then it kind of goes back on itself, changes direction, then it goes a different way until it hits an obstacle, it comes back on itself again and continues on. That's what a lot of traders do. They keep looking for something, and I don't know what it is they're looking for. And I can't help but think of this lady that I started trading many years ago. Amber, her name was. I'm sure I've told the story a few times before. She was a massage therapist, single mother, 5 kids, deadbeat dad. Nobody even knew where he was. She wanted to leave her massage therapist position and really, really get ahead of the game. And she became a trader. She went through my course. Today, she was doing very well. I was very proud of her. She was doing very well. I thought she was going to be the poster child for what we're doing here. Very good-natured lady. I remember she called me up once and says, "Hey, I guess I found a new strategy." I said, "What's that? What's that, Amber? What are you doing? What are you doing? Why would you look for something else when this is working for you?" No, no, no. I keep looking around. "Oh, okay, what'd you do?" She says, "Well, I'm trading. What is it? Naked puts on FFIV. FFIV is a tech company." I said, "First of all, I want you to stop doing that, Amber." "Well, why? I'm making money." I said, "Yeah, you are. You're selling puts, expecting the market to stay the same and and even go up. And yes, and as long as it does, you're going to make some money, right? But, big but. One day, one day, not if, but when that stock goes against you, it's going to go down. As it goes down, those puts are going to become valuable, and you're going to get a margin call." "Well, what's that, Hugh?" I told her, "This is a margin call, all right? You're going to get a call or an email or whatever from your broker. It says you have to come up with X dollars in your account because you are underwater. You don't have the funds to back it up, and you have to make good on that. And they'll probably give you a day in which to transfer the money over. And well, I'm making money here." I said, "Amber, I forbid you to do that. I forbid you to." She wouldn't listen to me. Oh yeah, lo and behold, that's why she called me up one day. It wasn't long after that. FFIV went down. The value of the puts went up. She didn't have the money to cover her shorts, and they came in with a margin call. I can't remember, it was around 45,000 they wanted from her, right? And I said to her, "Well, do you have the money? If you do, put it in. If you don't, they're going to liquidate your account and you're done." Well, sure enough, they liquidated her account and she's done trading. She was done trading. And I can assure you that had she just stayed with Trading Spy the way she was doing very well, just racking up win after win after win, nice modest gains every day, nice modest gains, she'd be on easy street now. She'd be on easy street. So she kept looking for the next big thing, next big thing. So what I tell people, when you find something works, and you know what, and it might not even be what we're doing here, okay? I don't care. Find something else, whatever works for you, right? Whatever works for you. Some people like longer out trades with long expirations. I talked to a gentleman the other day. Oh, he likes to do swing trading. He's out 4 or 5, 6 months. Okay, fine. If you're happy with that, that's great. I can tell you my temperament doesn't allow for that. I could never be happy with. I used to do those. I know the patience to wait, wait 4 or 5 months for an option to get out of here. It's not going to happen. I want my money and I want it now. I'll give you 5 minutes. But anyway, um, those if you can see yourself doing this strategy here, join us. All right. So what are we going to do here? We're going to talk. What are we going to do? The trading room, right? Trading room, very simple. This is our sort of our mainstay, our big thing that we do. It's hosted by uh, John Johnson and myself. I gave John the night off tonight. That's why I do these Sunday nights on my own. He does Wednesday nights. All right. He does Wednesday nights as part of the Inner Circle webinar. So I figure, well, we're not gonna torment each other and hold this on here Wednesday nights and Sunday nights. So I do Sunday nights and he does Wednesdays. But together, John and I have over 45 combined years trading experience. That's a lot of experience. And I can tell you that if I was to buy a mentorship from somebody with that kind of experience, there's no way I could afford it. And I don't think any of you could either. So our trading room, these are interactive sessions, fully narrated, learn and earn sessions. These are not watch you and John trade sessions. These are actually learning sessions on your end, all right? These are also recorded. So in case you miss them, you can go back and review them later. This is where our strategies come alive. We've got several strategies, pretty cool strategies that we do. We do this every morning, every trading morning, 9:20 to 10:30 Eastern Time. This is the home of our highly acclaimed $5 to $50,000 challenge. The cost is only $6.99 a year, sorry, a quarter. And look at, you can go to our website. There's some ridiculous high-end amount on there. I don't know why. I'm going to be talking to them about that. But if you just contact customer service at daytradespy.com, tell them you want the trading room for the special price of $6.99 a quarter, they should give it to you. Okay. Now, going to tell you something. Customer service, they've got a lot of people calling them all the time. You might take them a little while to get back to you. They will. Just be patient and get it for the $6.99 a quarter trading room. We also have other services. If you cannot be part of the trading room, we've got the Day Trade Spy Signal. Now, this is a particular option that is sent to your cell phone as a text message 3 to 5 times a week, sometime in the mornings. All right, sometime in the mornings. All right, these are algo-based trades. They're morning trades. So when a certain key setup or whatever happens, that's when you're going to get triggered. For an immediate buy, simply put up for sale for a 5% profit target. If it's not sold by the end of the day, sell it for the market close. Again, contact customer service at DayTradeSPY for the best pricing on that. Similar to the signal, we also have the pick of the day. Now, this one's a little bit different. Actually, this is a particular option that is emailed to you at 9 o'clock in the morning, sometimes a couple minutes later. And this is 5 times a week. And this is a hand-picked trade that John and I discuss pre-market. All right. This is like a handmade trade. And unlike a machine trade, right? And it's about to be designed to be bought at market open, looking for a 6% gain sometime during the day. If need be, you can even hold it overnight, but these trades usually happen very quickly during the day. So get into this one as well. Customer service at daytradespy.com. An excellent trade. I think a lot of people have both the Day Trade Spy signal and the pick of the day, and they're also in the trading room. Now, one of the things that we had started with back in 2010, this is when Day Trade Spy started. 2010 was the inner circle. You're going to get our morning market assessment. John prepares this, sends it out to you 9 o'clock in the morning. He does the heavy lifting, so you don't have to. He scours all of his news feeds, X feeds, Truth Social, all of those things, all the various things that he looks at, the technicals, the fundamentals, puts it all into a blender, spews out his brief analysis as to the way the market is going to go today. You can't beat it. If for nothing else, you want to get a comprehensive report as to where SPY is expected to go today, this is it. Morning market report. Now, you're also going to get a follow-up report later in the day as to what we actually did. And you're going to be invited to our Wednesday night meetups. This is where we discuss the events of the day. Bring your questions, your comments, your concerns. There's always going to be something John's going to be talking about. And this is actually a most affordable way to get started. Doesn't matter if you're a novice, if you've never traded anything since baseball cards as a kid to a seasoned pro. This is really a good place to be, folks. The inner circle. It doesn't cost you much at all. I mean, this is I forgot. They told me the numbers before, but I was shocked at how little this thing costs, like next to nothing. Again, contact customer service at DayTradeSPY for pricing on that. I think you're going to really love it. All right. All right. So those are the services. Now let's head over to the pumpkin patch where we can just have a little chat. And in doing so, I'm going to go back and take a look at some of these questions and comments that we have here because. Okay. So like the Wizard of Oz, isn't it? Okay, I want to get this out of here. I'm just queuing something up. Okay, nope, that's not what I want. Okay. All right, so the questions box. Lucy. Lucy had passed. Lucy's the dog that you see in the photo. She had passed away a few months ago. Mr. Dearly, okay, have you ever tried buying two data expiration options? The premium is a lot cheaper, allowing you one more day to buy contracts. Um, okay, so I no, I mean I have bought, you know, 0 day expiration, 1 day, 2 day, 3 day expiration. I do like to buy time. Okay. I find that the relief of that time pressure is just a burden right off my shoulders. Okay. Even with 2, 3 days to expiration, you still feel the pinch of that data loss. And one of the things, when the stock goes against you in those 0 day or 1 or 2 day expirations, and so the stock goes against you, the value of your, say, call option goes down. Well, when the stock comes back to that previous price level where you bought it, your option does not go that high. Your option is going to be under where you bought it, unless it happens like within a minute or something. Okay. But if it happens, say, an hour down the road, your option price, let's say the stock was at a certain price, $650. Your option is $3. Goes down an hour later, comes back up to the 650. Well, your option is not going to be $3. It'll be 280 or 290 or something. So you really feel the effects of that data loss. And when you combine it with volatility and everything else, let me tell you, it's not a good spot to be in. And then you say to yourself, I knew better. I knew better. You talked about it. I read about it as newsletters. Why did I do that? Why? Well, I'll tell you why, because you got lured. Folks, I'm going to tell you something here. I vowed to finish this up early at 9 o'clock tonight, so I don't keep you ransom, but it looks like we're going overtime again tonight. All right. I apologize, but there's a lot to cover. So I'm going to tell you why you keep buying those cheap options because they're cheap. They lure you in. You feel that I can buy more options, I got more opportunity, I'm going to make a lot more money. And you're right, you're going to have more opportunities, but the risk also goes up. There's a reason those options are cheap. It's because they're of higher risk. For the same reason that far out of the money options are cheap, because there's a higher risk. Yes, if the stock goes in your direction, you can make a lot of money. But do you know for sure, that much sure, that the market's going to go in your direction that you would invest a lot of money in really cheap options with the expectation it's going to go money? Look at everybody hits a home run once in a while. And if you really feel that this thing's going to go up like crazy, go for it. Buy those really cheap options. You might do okay. But just bear in mind there's a risk to these things. So I try to minimize my risk, and that is the reason I like to buy time. Right? Okay, so question here. When I say 10 wins, is that your wins or John's wins? That is okay. So when I say how many say 10 wins, 0 losses, 10 wins, 1 loss, or 1 holdover. That is what we do in our service. So that is our trading room, and we also combine that with our pick of the day and the signal and what we do in the trading room. Okay, that's what's out there sort of publicly. Now, admittedly, John and I also trade our own accounts after the trading room. Hmm. Excuse me while I wet my throat here. So we also trade after, but I don't include those trades in any of the things that I show you. All right. And those trades are going to be probably sometimes more aggressive, sometimes not. So depends what I have going on the rest of the day. As a matter of fact, on tomorrow, Monday, I've got to take my car and get it serviced in the afternoon, so I probably won't be doing much trading after hours, you know, after the trading room hours, I should say. We finish up at 10:30. I'll probably just, call it a day after that. I'm not sure, but usually if I have something going on in the afternoon, a lot of times meet up with some friends for lunch or something, and I just not going to bother trading that. So. All right. Okay, why don't you disclose the pick of the day and spy alert results for the week? Alexander, I include that in okay, so we do talk about those in the inner circle follow-up report. We do identify those winners and losers. And so you'll see those in our inner circle updates. And I do include those in that screenshot where I wrote how many winners and losers. Those are included in there as well. They're split out, but they're part of that. So those picks, the pick of the day and the day trade spy signal alerts, they're hanging around, I would say, like close to 90% success rate at the moment. Okay, they're around the 90% mark. I haven't looked at that in a long time, but we're probably pushing out for that. All right, another comment here for Mondays and Tuesdays, our expiration dates for the. Okay, so here's what I'd like to look for on expiration. Okay, on Mondays and Tuesdays, I'd like to look at same week Fridays expirations, and then Wednesdays, Thursdays, Fridays, I look at the following Fridays expirations. That's my general rule of thumb. Sometimes I will deviate from that if I get really aggressive and crazy. And I try not to do this. I don't do this. I'm not going to do this in the trading room anymore because I know some people get a little agitated over it. But sometimes I have done this where I will say, okay, I'm going to take a high risk trade, a 0 date expiration, I'll trade. But I notice that people don't really like that. So I'm going to, refrain from doing that in the future. Just stick with the rules as much as possible, right? All right. Okay. You lose a trade. You cannot win every trade. You cannot win every trade. You cannot win every trade, Michael. You don't win every trade. But what I'm saying here is that if you cut your losses at, say, a 25-cent cutoff, all right? So you look at the setups. We teach you in the setups. Get in the trading room. You're going to go in there because not only the setups, but you have to have enough room to grow into. We look at everything. We look at the fundamentals. We look at the technicals. We look at all that. When we talk about a trade that we're going to do, these are high probability trades. These are not just throwing mud against the wall hoping some sticks. Not at all. Not at all. These are high probability trades, and that's why they work so well. Okay. But not only do we look at the setup, make sure the setup is it, but we want to make sure there's room to grow into. So you can have a good setup, but we'll say, no, 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 we're not doing that trade, and here's why. I'll give you an example. All right, so let's say the stock is sitting at, I don't know, 650.25. And then we get the perfect setup that we're looking for. 620, 650.25 is where the stock is. But I see some very strong resistance at say 650.40. 654. So I've got 15 cents between where the stock is now and where that next major resistance level is. Well, I'm going to recommend that you stay away from that trade because 15 cents on the stock is not going to give us very much on the option, right? The option is a derivative of the stock. So if I'm only kind of realistically expecting a 15-cent rise in the stock, my option is not going to move very fast, very, very far. I might get a couple cents out of that, right? If I have a 50 delta on that, now the delta is the relationship between the option and the stock. Say if I have a 50 delta on an at the money option, well, I might get realistically maybe 6, 7, 8 cents out of that option. That might be good for a tight scalp, but I will not feel comfortable getting into that trade because it may not get up all the way to that resistance level. Very often the resistance is not going to take it all the way up. It's going to be a little bit lower than the resistance for the very reason that a lot of people want to jump the gun, so they will sell it before it gets to the resistance, therefore creating the resistance slightly under that previous resistance level. you might squeeze 5 cents out of that trade or 4 cents out of that trade. So let's say you got in for, the bid ask is say, I don't know, 297 by $3. Let's say you have a 3 cent spread. So let's say you have that 5 cents in that trade. So what, you made 2 cents? Now that just doesn't make sense. After to pay for the spread, and you talk about commission in there, you didn't make anything. You made a penny. I'm not going to put a lot of money into a trade to make a penny. All right, that's where I draw the line, right? I'm not going to do that. So in a case like that, I would recommend just stay away from that trade until we clear the resistance level, and now we see the next level of resistance. Okay, we have 60, 70, 80 cents before the next major resistance. Now it would probably be a good trade when the setup happens. So that's kind of what I'm saying here. So in your with your comment about that, not every trade is going to be a winner. We do set up for very high probability trades. And like I showed you Friday, every one of my trades was a winner. I had no losers on Friday. And if you simply pay attention, you should do very, very well. If and when the stock goes against you, cut your loss at 25 cents. You can make that up very easily. Okay. Right. Okay, so how does that cut 25 cents compared to the 40% loss rule that has been suggested? Okay, so we're saying there on some of these trades like the pick of the day. So I want to tell you something. Those trades that I show you that I done Friday, that was not the pick of the day. Pick of the day is simply, and staying with this signal, those are statistically proven trades. In other words, over a long period of time, they had been very successful, statistically speaking, that you just buy this at this time. All right. The trades that I had done were based more on what I call my bread and butter setup. And when this particular setup happened and I have room to grow into and everything else fell in line, then I got into the trade. So they're different trades. All right. For the say the pick of the day where we say something like, okay, if you're down 40%, cut your loss there. Something went horribly wrong. All right, but even at that, oftentimes we say just hold on. The next day will probably be okay. Right, yeah, controlling your losses is the bigger problem. So try that, Robert. Try that. If your setup is there, you have every reason to go, to get into the trade, but then it turns on you. And take a look and see. Now, if you're approaching a 25-cent loss, check to see, is there a support level, assuming to the upside, is there a support level that you're going to hit? Because if there is, in all likelihood, it's going to hit that support, bounce up, okay? And you might get what we call a dead cat bounce. Dead cats don't bounce very well. I don't even know who came up with that stupid term, but what that is very simple. A dead cat bounce is where it comes down, finds support, bounces up a little bit, oftentimes to a resistance level, could be an EMA or something, comes back down, double bottoms, maybe not even double bottom, could be a cup and handle, then goes back up. Okay. So just because you are down doesn't mean it's going to be a loss. Okay, just hold on. Depends on where it goes. All right, so let's move on to some other questions here. Okay. Why not let your runners run? Isn't that taking what the market gives you? That sounds good. Yes, and it is true. And you can take. So I know John does that a lot. Like he will let his runners run more than mine. John will oftentimes take fewer trades, but he will let them run a little more. So he's an excellent trader that way. Okay, and he'll look at a bigger picture using Fibonacci. He'll use different tools than I do. Okay, so John and I use completely different tools, but we come to the same conclusions. All right. So we have so if John says, I think the market's going to go up, and I say, yeah, I see that using my indicators, I think the market's going to go up as well. You might want to buy call options because it's probably going to go up, right? We have a saying that says when our indicators unite, our trades ignite. It works very well. And that's, I think, really important. So, yeah, you could let them run and you'll make your $200, $300, $500 in no time. And here's the beauty of that thing about making these $200 trades a day or $300, $400 or whatever. This is what I really like about it. Some days you're going to make three, four, $500, okay, which gives you a really nice cushion in your trading plan. And it's so nice. to get ahead of the game with that. You almost feel like you can take a day off from trading if you want. In other words, it removes the pressure and you don't feel the need to trade. Let's say the next day something happens, a lot of crazy stuff going on today. I think I'm just going to sit back and watch, right? You don't have to feel bad because you got yourself covered from the day before and the day before that. So, okay, a question here. If you go in and out the same option contract multiple times a day, is that subject to the wash rule? Um, I go in and out multiple times of the same option, sometimes many times during the day. And I'm not sure what the wash rule is. I know what a washroom is, Bruce. But um, basically, you have to have, okay, so if you're going to day trade, go in and out multiple times, you either have to have the funds to back it up or 25,000 in your overall accounts, okay? So if you have Roth or I don't know, 401k or something. If you have all these different accounts, put them all together into say your Schwab account. And for example, I have money in other Schwab accounts. I don't have everything in my Thinkorswim, but I can trade as much as I want in my Thinkorswim because overall I have more than 25,000 in my Schwab account. So I'm not suggesting you trade. I don't want you trading the whole 25,000, especially if you're a newbie, all right? Because if something goes horribly wrong, you're toast, right? So you don't want that. So, but okay, let's see. So let's see that. I hope that makes some sense here. I'm trying to see some of these comments here. Rod, I can't make out what you're trying to say. You might want to rephrase that here. Okay, I'm new. Join the pick of the day. Give us the pick and expect us to buy a call in the first 2 minutes when the bid ask tightens up 2 to 5 cents and immediately sell. Put up a sell. That is correct. Okay. Okay, so the pick of the day, I'll tell you how that works. Um, if let's say the pick is a call option, all right, that means at the beginning of the day, 9:30 Eastern time in the morning, you're looking to buy within the first 2 minutes. Okay, that's sort of the objective. Now, if you see the pressure on the 1 minute chart, the pressure is going to the upside, then you want to buy it right then and there. Okay, just buy it. And the best way to do it is go a penny or two more than the ask price. So you actually get it and you're riding it up. You'll get your 6% in a heartbeat. Okay. Now, if it's a call option and the pressure is to the downside, wait until that pressure starts reversing and going back up, then buy it. Then you're going to get it for a discount. Okay. Sometimes that happens because between the time we send it out at 9 o'clock and 9:30, a lot of things can change. But overall, from a high end level, we're expecting the market to go up, and you'll probably do okay, right? Right. And if it's 3 or 4 minutes before it turns back to the upside, buy it at that time, right? Now, if it's say 15, 20 minutes, might want to just say, I don't know if it's going to go up. It might just, something may have triggered it to go completely the other way. So, but if it dips by 25 cents on the open, well, it should not, and we don't know what the price is going to be, so we can't give you a price. People sometimes ask us, well, what's the price? You don't give us a price. Well, nobody knows what the price is of the option at 9 o'clock in the morning, right? Because the option market opens at 9:30. So what happens is at 9:30, that's when the option price is set. All the various factors get factored in there. All the various components get factored in, and then you get a price, which could be way different than we think it's going to be. We have no idea what the option price is going to be at 9 o'clock in the morning. No, nobody does. Nobody can give you an option price, folks, because there's a lot of things that go against, that not against, but get factored in. Any time loss from yesterday, any volatility issues. Volatility is the big one, right? You don't want to buy in a high volatility. And when volatility is very, very high, you might want to wait until the volatility settles in. Usually happens a couple of minutes after the market opens. So, all right, some more questions before I call it a real kind of a night here. Um, okay, so here's a question here from Vanessa. It's great if you have 25,000 to start. Will be a lot less for those of us that can't make that amount. Okay, so what that means is, yeah, I'm sort of assuming you got 25,000. If you can just trade one trade, so first of all, uh, whatever you have in your account, you can trade that much. If you have, say, 10,000 in your account, you can trade up to $10,000. So you might want to trade, two trades or three trades to get there during the day, but wait until your trades settle, which is the following day. Then you're able to trade it again up to what you have in the account. If you do, as a rule, fall into that, you're generally allowed three round trip trades in a 5 day period if you don't have the 25K. But if you have in a cash account, if you have in your cash account, get a cash account. Don't get a margin account. Get a cash account. And if you have, say, eight or $10,000, you can trade as much as you have in your cash account until they are covered. In other words, so if you don't make 50,000 in 1 year, you make 30,000. Is that so bad? All right. So, uh, okay. Yes. Some of John's explanations and voice overrule your trades. How can you overrule his voice to hear trades? Okay. So here's a little issue, and John and I are kind of working on this one. All right. So Carolyn is in our trading room. Thank you for being there. Um, we both narrate. And here's the issue. Sometimes if John is talking, I don't want to step over him and be rude and say, John, I don't want to interrupt, but I'm looking at getting into a trade. So I would look to execute a trade. Okay. And then I tell the group after the fact. So John and I are trying to come up with a system where we would maybe a key trigger word, right? We'll use a key trigger word. Like, okay, excuse me, John. Maybe I'll say, excuse me, John, then I'll stop talking. And the same with him. I might be talking, could be even something completely irrelevant. But if he says, excuse me, Hugh, then I stop talking. He takes over. And I think that's the way to do it, Carolyn. And I'm glad you brought that up because, yeah, we do want to address that. We want to make sure that if we are looking to get into a trade, that we have the opportunity to explain it before we get into the trade, not after the fact. So, and yes, Vanessa, you could be trading along with us here in the trading room. That's exactly why we have the trading room here. So, all right. Okay. So, question coming up with Thanksgiving here. So, Monday and Tuesday, I will still be trading this Friday's expiration because that time goes by for the whole week. All right. So, we're still gonna have Wednesday and Friday morning. Right. There's going to be some time lost in Thursday. But on Wednesday this week, I'll be trading the following Friday's expiration. All right, so I hope that's clear there. So, right, okay, okay, okay. Not really sure, Alex. Another question I have after trading 3 months with you and John. I don't remember ever seeing such wide jumps or spreads as you and John say in the trading room from the start of the day and the end. For example, Friday we started at 655, then went to 650, climbed to 662. 17 points jumping range. Last 3 months have been pretty wild, Alex. I'm not gonna kid you here. When I go back and look at the charts, there's some real wide ranges in there, and it happened a lot with tariffs, trade embargoes on China, and all this craziness going on. Last 3 months have been very crazy in the market. And of course, we got into the government shutdown, right? The government shutdown, and we also got into earnings reports, and yeah, it's been kind of crazy jumping around there pretty good. So, what's the 90 90 90? Well, you're gonna have to the 90 90 90 trading rule. You're gonna have to come online and not to come online, but you have to get the newsletter to find out. And it's basically says that what's the rule here? 90% of traders lose 90% of their money in the first 90 days or something like that. And we're going to address that and how you can avoid that. All right. All right. Let me see some more questions here. Put comments in the chat. This is not interrupting one another. John H says put my comments in the chat box so we don't interrupt each other. We find that the chat box, John, is can be cumbersome. It's just one more thing we have to type in and do, and we're taking our focus off the trade. So we're going to probably try a different system where, we're in real time. We're in a real time world, right? And that's so we're going to probably just do a vocal thing here. So, all right. So what we're going to do now, folks, we're going to have our any question. I know last week somebody said, "Well, do you have a phone number for Eagle?" There's the phone number there. But right now, if you need the phone number again, let me know and I'll put it back up there. But right now, let's have a contest. I see that I cannot believe it. It's 9:23. I don't know where time is going, but it is just slipping by real fast. So what we're going to do is we're going to have our contest, and the winner gets a copy of Triumphs and Tragedies. It's an ebook, and it's going to go out to the person who is closest to our random number generator. This here, folks, is not the number. All right, this is from last week. This is not the number. I want you to now, I'm going to give you about 30 seconds or so. Put a number in the questions box. Put a number in the questions box. You got about 30 seconds to do it, maybe 45. Just pick a number from 1 to 100. It is not 4. Ignore that. And I'm going to hit the number, the button that actually triggers the number, the random number generator. This is our official DayTradeSPY random number generator. And the person closest to it is going to win the ebook. The ebook is Triumphs and Tragedies. And yeah, and that's going to be very exciting. We're looking forward to the winner there. And while you're doing that, I'm going to cue up my extra song. That's what we call it, an extra song. All right, so we're going to cut it off right now. Let me see who's like Carolyn. Nope, Rob. Okay, okay, Rob M is the last one. Okay, so now we're going to hit the button, folks. All right, here it goes right there. The number is 51. 51. Now I'm going to quickly go through all the numbers. Oh my gosh, all the numbers. Let me see. Who is the closest here? 51. All right, dear Ronnie is at 47. She's only 4 away. If there is a tie, you both get the ebook. All right, 51 is the number I am looking for. 51. David V. Came in at 54. He's only 3 away. Okay, the winner is David V. Congratulations, you won the ebook, Triumphs and Tragedies. David, question, did you already get that ebook? If so, let me know in the questions box, and I'll send you Triumphs and, Tips, Tricks, and Traps. But right now, you've got Triumphs and Tragedies coming to you. If you want tips, tricks, and traps, let me know that too. Okay, he's got tips and tricks. Okay, I'll get you Triumphs and Tragedies. All right, folks. Well, congratulations to David, and thank you all for playing along here. Folks, I'm going to wrap it up here. Thank you for joining us. That is recorded. The recording will be out probably tomorrow. Have a very safe and happy Thanksgiving. Really happy Thanksgiving, folks. Take care.
Shine brighter than the moon and the sun. Be great at what you do. Give it all to you. And trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it. And if you do, then just shout it loud and clear. I wanna know if
Don't forget to sign up and follow us on Instagram, folks. DayTradeSPY_, right? DayTradeSPY_ on Twitter. No, sorry, Instagram.